Well, we've got Tesla, Trump, and turbulence, so should investors be worried? And with the S&P 1.3% from new highs, the big question is, are we on the brink of a breakout? And with first quarter earnings wrapping up, is it mostly winners or wieners? I'm CB3 with Money in Motion. Today is Monday, June 9th. The CB3 Weekly Update begins now. Last Thursday and Friday, the markets reeled with the tensions between Elon Musk and President Trump, and that sent Tesla tumbling. I don't know which of these two men has more to lose, but I suspect it's Elon Musk. And here's why. President Trump has the ability to change regulations so that it would hurt Tesla. And if that happens, it's going to affect the performance of the Magnificent Seven. So realize that this brawl that's happening right now is not only bad for America, it's bad for money. With the S&P just 1.3% away from highs, what's going to happen now? It looks to me like we will be indeed setting new highs, even though doing so in the summer months is unusual. But as I dissect the technicals, the Fed's latest signals, and the market's internal health, I'm seeing that things look pretty strong as the first quarter earnings season wraps up. Last week, the markets closed on a high note with the Dow up 1.2%, the S&P up 1.5%, and the NASDAQ climbing 2.2%. But today, Monday, it was pretty neutral across the board, although the NASDAQ did do better than the other two indices. But this doesn't take into consideration what I mentioned to you earlier about the Tesla-Trump brawl. That affects the market because Tesla is such a big player in the market. Beneath the surface, it's not smooth sailing necessarily. So the week was dominated by two stories, geopolitics and tariffs. The tariffs are still the number one topic, although the Trump-Musk brouhaha is certainly becoming the number two subject. The European Union, for its part, offered zero tariffs on industrial goods and more U.S. energy purchases, and that's a positive, but there was still no trade deal reached. Until we have more conclusive trade deals like the one that we struck with the United Kingdom, still the only one as of this publication that is significant, we are going to have uncertainty in the market because tariffs affect pricing, pricing affects demand, demand affects economic performance of hundreds of companies. So the proposed tariff could push the average U.S. tariff rate to levels not even seen since 1909 and shave another 0.2 to 0.3% off of GDP. I don't think Trump's going to let that happen. His goal is to get 5 to 8 signatures done before July 4th. That's going to be pretty ambitious, but it's certainly possible. The war in Ukraine remains a flashpot. Certainly his stance is that Russia needs to back down, but there doesn't seem to be any inclination from Russia to do that. His second term has already been leaving a substantial mark, so he has an aggressive stance on trade, and this is actually good for us as investors in the long run. In the short run, it's definitely painful, but these sweeping tariffs that were put in place on China, Europe, and our other partners has rattled the markets and raised the specter of this continuing global trade war. There have been some legal challenges that have temporarily blocked tariffs, but the administration signaled it will press ahead and seek relief from the Supreme Court. On the diplomatic front, Trump's approach to Ukraine and the Middle East is shifting the global political landscape. U.S. support for Ukraine appears more conditional, in other words, not a carte blanche anymore, and Trump's alignment with Israel's far-right government has drawn criticism for those seeking a two-state solution. I'm not sure how we're going to ever have a two-state solution. Again, it's that level of uncertainty that brings consternation to the markets. And when there's consternation in the markets, there tends to be more selling than buying. Meanwhile, though, a recent call between Trump and President Xi of China offered some brief respite, but nothing long-lasting. So what's ahead for the markets this week? Technically, the S&P 500 is testing key resistance. That means the price is pushing up against a previous high, and that is the lifetime high of 6,129.58 hit on February 18th. We're at 6,010 right now, so we're still a ways away from that, 119 points in the S&P. But it could hit there, and it definitely could hit there this summer. And again, if we can get the Trump-Musk brouhaha out of the way and start seeing signed trade deals and seeing Congress making progress, at least in the Senate now that the House has passed the great big beautiful bill, the Senate has to get on board with that. And right now they're definitely not on board with that. So that's what's up ahead this next week. Now I have a brand new segment I want to introduce to you, and I think it's going to be something that will benefit you. It's called Money in Motion. So everywhere, every day in the world, money is in motion, doing something, and it needs to be working for you. So in this segment, every time I do the show, here and on CB3 Live, we're going to talk about a stock tip or some investment that could benefit you. We're going to talk about some money saving idea that could benefit you. And finally, we'll take questions from listeners who have heard our show and said, you know, I've got a question for you, CB. Could you answer this for me? So the first one I have for you is Axon. That's ticker symbol AXON, Alpha X-ray Oscar November. And yes, I'm going to use the military jargon here. I'll be doing that throughout the show. I would suggest you learn it. If you're making a lot of trading decisions and using a lot of ticker symbols, it's good to have the military alphabet. So Axon Technologies, Axon Enterprises, it's called, ticker symbol Alpha X-ray Oscar November, is a solid high growth stock. Really exceptional financial momentum right now. So in the first quarter of this year, 31% year-over-year revenue growth, raised its full year outlook to 2.6 to 2.7 billion, targeting 27%. That's right, 27% annual growth, and that is an astounding rate of growth. Annual recurring revenue, 34% up to 1.1 billion. Realize that recurring growth is growth that's in place from a subscription basis. So that's really attractive to investors, and it creates a strong demand for its software and integrated public safety solutions. I really like this stock. We have it in 2 of our portfolios. If you're investing for yourself, check out AXON. So the next thing, what's a money saving tip? Well, how about this? Just cancel subscriptions that you aren't using. I have to follow my own advice on this. About every quarter, I look and see, what am I paying for that I'm not using? Or am I really, really using it a lot? And if not, I cancel it right away. And I want to suggest to you, they always try to get you to invest as an annual subscriber. Don't do that. Become a monthly subscriber, even though it's going to cost you more for the first 1, 2, or 3 months. And then and only then annualize that subscription to save the money when you know that you're going to be using the product. So that's my tip for saving money. The question that I had from a listener was, how do I handle my mother's estate? Where do I start with? The legal work, or do I hire a CPA? Well, my answer there is, first, I am not a CPA and I am not an attorney, but here's what I would do if it were me. I would determine if this estate needs to go through probate. There are certain situations where you can avoid probate. If she had a living will, transferred all her assets into it, you might be able to avoid probate. So in this short form program, that's the very first thing you need to understand. Is there a trust in place, and were the assets transferred all into the trust, which is a separate legal entity than your mother herself? Okay, you can put your situation in there, see if that's useful. Guys, that's the show for this week. We're trying to bring you relevant news so that you can make good investment decisions for yourself, so you can understand what's happening in the market, so you can leverage the experience of a 32-year veteran in the markets. I am here to help you any way I can. CB3 is the name. I'm the portfolio manager with CB3 Financial. We'll be back next time. See you then.